Hi guys, this is an update on the market and smart shares NZX for Friday the 12th of June, but really should relate for Thursday, but a bit late on this one. End up doing quite a lot of study. I think it's important to do a lot of study because I also do this to educate myself. If you want to learn something, which I'm not totally inept with, but the saying goes, if you want to learn something, teach it, because it makes you become a better teacher, because you have to understand more and more. So that's good. So yesterday we had a little bit of a downturn, quite a nice little steady downturn though, if you ask me. Wasn't like a shock, it was quite managed. It wasn't a capitulation. So I see it myself, taking everything into account, just a normal retrace, because we were at all-time highs and the NZX had broke above this previous return to previous level. I call it return to previous level. This is basically the downturn of the virus. So it's overshot it quite in a big way. Didn't hardly even notice it. So it's pulled back a bit. And I did mention, I believe, on Monday or Tuesday, that the SPY that I was looking at the time, because I'm looking at the NZX more so, at the time I said, we've reached this point here and we may need to look out for any pullback. So we have had a pullback, but it looks like it might have jumped a couple and gone to this one. Okay, because I'm using these previous patterns as a reasonable guide. They're not too far off. You just have to keep adjusting them a wee bit to fit what's going on, because all of these patterns in one way or another are smaller or larger increments of what's happened in the past. A lot of the time. This is the 2008 crash. And as you can see, it's not too far off, projected forward. So overall, could come down lower. You never know. A lot of it has to do with watching what's going on, and there's no reason for it to happen, if you ask me. Everybody knows that we're going to be having downturns and things aren't all going to be rosy, and it all happened because of Fed Powell. Jerome Powell had his speech and everything he said in it was positive. I'll play it. Where are we? Where is Jomome Powell? Up here somewhere. That looks like YouTube. I've stopped it at the part that I wanted to show you, and this is just what he says about still supporting the markets.
We're also committed to using our full range of tools to support the economy in this challenging time.
Right, and that's all you need to know, if you ask me. So why we had a little bit of a crash is just, like I say, people taking money, profits from the highs, putting a bit in their pocket, getting back in. So we'll quickly run through the ETFs, the shares, smart shares. These are the bonds, global aggregate bond. I got rid of that NZ cash one because it didn't quite fit in, but I'd imagine it's gone up. Might put it back in if it behaves. So that's them. They don't seem to make any sense. They go up just as much most of the time anyway. So this previous projection pattern, we would have been at this point anyway on healthcare innovations. Bit of a pullback, but today, Friday, we're already open and looks like we're getting a few buyers coming into the market. The ones that understand what's going on. I wouldn't panic. This is the sort of thing that you might want to panic about, this automation and robotics. You know, this is the most sort of drastic sort of looking thing that we have. Just that there, don't like it, it's too thick. So you just need to keep an eye on that one if you're in it. Next target would be here for this to bounce off. Might come down to there, but overall, where do you think it's going to go? In 1 or 2 months' time, where do you think it's going to go? Right. Now, coronavirus, there was a bit of talk about another uptick in coronavirus. Where was the coronavirus? United States. So this is the World Meters Info Coronavirus. By country you can search it, and by state. So they've got over here projections. Just excuse my not exactly lightning wireless internet. Right, so this is where we are today. Their projection is looking pretty flat. So there's no real reason to be panicking as far as New York goes. Yeah? Some of these states do have a little bit of a higher projection. If we're looking at the states, other countries, in my opinion, are just, don't even worry about it, not even Russia, right? Unless they're all sort of catch it. That might not be too flash. But here we are today. So California has a potential of going a little bit higher if they don't get onto it. So, well, I mean, that's nothing new, is it? We all know that. So, did I finish with this? No. USA, same path, nothing drastic there. That's what I reckon. Draw a lovely jubbly trend line. Trend lines will save your life. You stick a trend line in it and the candle goes, hang on, he's put a trend line in. Yeah, you wish. But you'll be amazed how often a currency or index will respect a trend line. I believe I clicked on there. Global equities, dividends, whatever. Aussie, New Zealand Herald. What does this say? Brewers, reverse thrust air travel back to where it was 14 years ago. Rubbish. Air traffic, we're down 81% from the same time last year. This is a website, Eurocontrol. Right? If you go to Eurocontrol, which I've only come across by watching other people on YouTube and seeing what they come across, this shows you the comparison from April 18, 2019 to 16th of April 2020. So quite a stark contrast. Needs to be updated though. Alright, but that chart there was updated. So why they write things like that, I do not know. Blah blah blah, Zoom, Vatican, comment flattery, New Zealand economy amongst the worst hits. Well, there was another thing I saw. Where was that? As far as credit card spending was up, and that was macroeconomics. Here we go. Trading economics. New Zealand dollar falls, New Zealand shares retreat, New Zealand credit card spending rebounds sharply. Okay, so that means spending is up, manufacturing sales tumble, as we'd all expect, import prices rise unexpectedly, which we expect, not unexpectedly, export prices fall less than expected. Yeah. New Zealand term of trade unexpectedly drop. What's all this unexpectedly? Good God, man. New Zealand business sentiment improves. Yeah. New Zealand posts largest trade surplus on record. Yeah, brilliant. NZ retail sales slide. Yes, we know. But credit card spending has rebounded. So they will start to recover. Yeah? Yeah. Right. This is just FinViz. So FinViz, I thought that was the sectors one. Where's FinViz sectors? Is that it? Groups. They all were down yesterday. Right, that puts them all down overall for the week. But for the month and stuff, all still up. That's about it, I think, as far as any relative news. Now, don't forget to share, like and subscribe. Follow along if you like. You can download the list for the Smart Shares. Wrong one. Smart Shares from the channel. Did I ever get to the end of this? Hello. Yeah, back again. So, what was that? Asia Pacific, Australian. Just need to keep an eye on it. I just got an announcement saying that I can trade for free, basically. I think it said on CMC markets with their ETF baskets. So if you can get in and out of a market for free, just following a crossover indicator like this, a moving average, you will make money. Especially if you are doing it at highs and lows. Wait until it rolls over from a daily high, weekly high, hourly high, enter the trade on the crossover and just keep following it down until it starts to roll over, and then you get out on this one, on the first line that it touches and crosses. Okay, easy peasy Japanesey. I'll keep you updated on that because I'm going to give it a go. Alright, take care. Hang on. I've still got to do a quote. Okay, this seems to be quite applicable. For any consumer of daily financial news, this will ring true. Equity markets swing wildly from day to day on the smallest of news, rally and crash on the sentiment, and celebrate or vilify the most inane data points. It's important not to get caught up in the madness, but stick to your homework. Okay, now that's within reason, of course. Like I say, nowadays you can actually trade with no fees. Americans can, at least anyway. So it pays you to get out at the slightest sort of hiccup, wait it out, or enter the opposite direction, and then just follow the trends. No fees, you can't lose, in my opinion. Thank you very much. Take care. Have a good day.